Welcome back to the channel, guys. In today's video, I'm going to showcase my powerful Fibonacci trading strategy and explain how it made me $740 on two trades on AUD USD and Euro USD. Here are the positions. So we had a nice long on AUD USD and a nice short on Euro USD. I'll explain my complete Fibonacci strategy combined with the confluences I look for around my entry point, and also how I determined the overall trend and direction of the markets. Let's get into it. So, starting with AUD USD, I'm going to clear my chart and explain my three-step process of what I look for on each Forex pair when I begin my technical analysis. So, step one is to determine the market trend. And I use the weekly, daily, and 4-hour. These are pretty much the only time frames I actually use when I'm on TradingView. Step two is to identify my Fibonacci range. And step three is support and resistance, order blocks, and fair value gaps around the 61.8% fib level. Awesome. So that is my complete trading strategy. So I'll break it down and showcase what I did on AUD USD. Starting from the weekly, working my way down, drawing the Fibonacci range, looking for the confluences around my area of interest, and actually setting the limit order and taking the trade. So, up here on the weekly chart, I'll use the brush tool to highlight market structure. So I use the extreme swing points and recent breaks in these swing points to determine my trend. So starting up here on the weekly, oops, that's the wrong one. Use a highlighter. We had a swing high. We made a swing low, a swing high, and a swing low. So I use the extreme swing points in the market. Now, we made this lower low and price had a bullish run and broke this high. Made a new swing point, came down, broke this high again, and now made another swing low. So as you can see here, we had a change of character and a shift in market structure to the upside. So we broke the structure here, and we broke it here. So I need a full body close over the wick of the swing high for an actual valid break in market structure. So that's why we are bullish on the weekly time frame. So weekly is bullish. Dropping down to the daily, similar story. So we was bearish, and then we swapped to a bullish market structure. Now, it's not as clean as a weekly, as there's some internal structure here, but as you can see, was bearish overall, swapped to bullish, and had a nice impulsive break of structure and move to the upside here. So that's why we are bearish on the daily. And the 4-hour most recently has swapped to bearish. However, my main two confluences, especially if I'm drawing a daily Fibonacci range, are the daily and weekly. So to show you what I mean is, on the daily chart, I draw my Fibonacci range from the most recent swing point in line with the trend. So it's a nice bullish Fibonacci range that broke the structure to the upside, as you can see here. And if I drop down to the 4 hour, the market structure did change bearish as it was working its way back down to more discount pricing. So that's why I mainly focus on the daily and weekly for my trend, but I do keep in mind the 4 hour chart as well. So that is step 1 on my list, determine the trend. So we are bullish. Now identify my fib range. I have already done this, but it's the most recent break of market structure and the leg and the swing point that caused it. So the most extreme swing point is down here on the daily, and then the swing high is all the way at the top. So that's my daily range. Now, for my strategy, I do trade a negative risk to reward, and I use the 61.8 level for my limit order. So I'll put my order on the screen. Perfect. Stop loss goes at the swing low, and I target a negative risk to reward. So I target 0.25%. So on the funded challenge at the moment, I risk 4% to make 1%. Now, I just don't set my limit order on every 61.8 level. I do need a few confluences, and that is step 3. So after I have my range and have my limit order, I double check each of these. Is there support and resistance or an order block? We had a very nice daily order block here, and it also doubled as support and resistance as well. So if I drag that all the way along and refine it a little bit, we also got a nice support and resistance zone with multiple touches. So we had both of those. So it's either support and resistance or an order block. Next is a fair value gap. If it's not on the daily, I drop down to the 4 hour to identify these. And as you can see, 4 hour, we have a few fair value gaps right near our 61.8 level. So very nice. The reason why I look for a fair value gap is typically after an impulsive move such as this, the market will retrace to refill in these fair value gaps. As you can see, it's filled in quite nicely and had a nice reaction from my entry. And yeah, it all has to be around the 61.8 level. So it doesn't have to be exact, just has to be in the general area. Also, another nice confluence is the use of the 50 EMA. So there it is. It's in the area of my entry, and it's an additional confluence that can help the psychology holding on to these positions. But that's not necessary for my strategy. As you can see, price tapped in here, got re-entry again, and has had a nice bullish reaction to the upside. Now, I closed this last week on Friday night, just so I didn't have to avoid playing swaps over the weekend. And that's just why it's a little bit less. So I closed it at about 0.12R. So I closed it roughly around here-ish. So about halfway to my take profit. But as you can see, it's had a very nice reaction and has continued to the upside, smashing the original take profit. Now, on eurusd, very similar concept. But as you can see, I have a short on my chart when I have a daily bullish range. So I'll explain that in a second. So same checklist, using a swing structure on the weekly. We're obviously bullish. The market is trending to the upside. Down on the daily, similar story. The most recent daily bullish range that broke structure to the upside. And as you can see, I have a limit order set at the 61.8 level with a nice support and resistance zone. Now I'm waiting for price to trace back down and tag me in. In the meantime, I do short the market down to my higher time frame daily limit orders. So as you can see, the 4 hour was bullish and it was aligning with my daily and weekly trend. However, we had a shift in market structure to the downside. So we had a bearish rally and another bearish rally, which resulted in multiple breaks of structure to the downside. And it's the same thing in reverse. So we had a nice bearish range using the extreme swing points on the 4-hour chart. We had the 61.8 level lining up with a support and resistance zone, a nice supply block as well, or order block. Also the 50 EMA in this case, and a fair value gap for price to retrace and eventually fill. So another high confidence trade setup, and as you can see, if I drop down to the 15-minute, beautiful tap in, and 30 minutes hit the take profit, and resulted in a $490 win. So that is my strategy. So I always have a daily Fibonacci range, and I either long and short on the 4-hour down to those zones, or after it has reacted. So for example, on, I believe it's CAD JPY, yes. So we have the daily bullish range here, but on the 4-hour, you can either short the market down to our higher time frame long target, or after we get to our higher time frame long target, there's opportunity for longs as well. So price was coming down, it's reacted to our entry level, and we can take longs such as these using the extreme swing points on the 4-hour fair value gaps, support and resistance. So that is my powerful yet simple Fibonacci trading strategy that utilizes the higher time frames. And yep, AUD USD is reacting nicely, and we could have done a similar sled up as well to eurusd, which did, I reckon, let's see, I preferred the eurusd as it had a lot more room to the downside. That's why I had my limit set on that one actually. Oh. Let's see here. If it's hit or if it's a stop loss. Yep, this one just hit as well. So 0.25. Perfect. But I didn't like the string structure and market structure on that one. That's why I opted for the eurusd, because it had a lot more room to the downside to my higher time frame target, whereas AUD USD had a smaller gap. If I put the 50% level back on my chart, as you can see, it was a lot closer to the 50% level versus eurusd. There's a lot more room to work with, and that's why I was more comfortable shorting eurusd instead of AUD USD. So to summarize, I'll get the checklist back up on the screen. Determine the market trend using extreme swing points of the market on the weekly, daily, and 4-hour. I find anything lower, it doesn't hold the strength and significance, and it gets a lot more choppy and confusing. If you stick to these higher time frames, your market trend will be spot on and a lot less confusing. Step 2, identify the Fibonacci range. So I always, on every chart, have a daily Fibonacci range. And that's my main point of interest and what I keep in mind. So either if I'm looking for longs or shorts on the 4-hour, I always keep where price is relative to my daily range in the back of my mind, so I know if I'm shorting in discounted prices or premium prices. So, yep. And step number 3, look for 2 to 3 confluences around the 61.8 Fibonacci level. So they can be support and resistance, order blocks, fair value gaps, inverse fair value gaps. You can even wait for price to, on a lower time frame, start shifting market structure and get there, get in the market then. I just prefer the simplicity of setting a limit order on the 61.8 level and moving on to the next Forex pair. So that is all. That is my powerful Fibonacci multi-timeframe trading strategy. I utilize a negative risk to reward ratio. I have a few videos on my channel so far explaining why I do that and how the probabilities don't matter too much. It all depends on your ratio and your win rate. It's quite a large misconception that you need a positive win rate, positive risk to reward ratio to be a profitable trader. Each ratio and each win rate have its own break-even and profit rate. So the combination of those two is what makes your strategy profitable. It's not one or it's not the other. And as you can see, it's had a very nice reaction. This is a very high confidence setup. On the daily chart, it holds quite a large significance. Nice daily order block, Fibonacci level, EMA, fair value gaps on the smaller time frame. You're more than welcome to hold this trade to a 1-to-1, for example, or a high risk to reward ratio, target that swing higher. Do the back testing, find what works for you, but do keep in mind a negative risk to reward and the power of a negative risk to reward ratio. Thank you for watching, guys.